Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player.
Good day, all. Ira Epstein of Linn Associates with your financial market wrap-up. And this is for Thursday, the 17th of January, 2019, just getting on to 3:30 p.m. Central Standard Time. This will be the closing prices of all the stock indices. Now, as we're talking, they're going to reopen at 3:30 trade, but that'll be the settlement price of it. And what took place today was a flyer. A trial balloon was sent out, I think, by Treasury Secretary Mnuchin, saying maybe what we should do is take off the Chinese tariffs, or some of them, to make the talks go even further and quicker along with China, who is sending their trade delegation on the 30th and 31st of January into the U.S. for another round of talks. So what did the market do? It, of course, took off on the news, and the market, it sold off from its highs, but it certainly was the jolt that you would think it was to the marketplace. It also caused the bonds and notes to sink a little bit because that could cause higher interest rates again. Grains heard that there was Egyptian buying, possible Chinese buying in them, and away they went. And the energies, of course, had a good jump on that news, but they managed to settle back. Later in the day, we find that no, those aren't formal recommendations. Get serious. They're the trial balloons. Now, before I get going, one of my most popular videos is one you don't see, and we made a change. We are going to make a subscription just to that at an extremely low price. I record that at 8:30 a.m. each morning to get you going with trade ideas, what I'm seeing for the day, where things are coming together. I'll talk about that right at the end of the video, so don't go away when you're finished with this. The weekly area chart of closes. We're still getting a heck of a rally out of this market. If you think about it, on a closing basis, you were here, and let's just put it here. 24.8575 was the low close, and we made that the week of December 21st. Nobody's listening to me when I keep saying this is part of the Santa Claus rally that you're in right now, because since Christmas Day, the market has had a heck of a rally up back to the 26.35 level on a settlement basis. Some traders say, nah, this is just a bounce at a bear market. Others are saying it's more than that. We'll see. How's that? What I can tell you, if you look at this general top area from high to low, you've got about a 50% retracement in the market. So you're into a resistance zone. The interesting thing is you had an outside day up today, which tells me if the market isn't going to peak here, what should happen is we should not take out today's low in any of the stock indices. We'll go through that between tomorrow and Monday, Friday and Monday. Otherwise, my idea that you're possibly setting up a bull trap out of the outside day would come into play. Where's the support in this market? Back at the 18-day average of closes is one of the support levels. Resistance is way up at the 100-day average of closes, and the Bollinger Bands are also climbing rather sharply. How far they'll get from that, I don't know. So what I don't want to see, and I'll repeat it, is today's lows taken out. That could put into play that price and the 18-day average make a run back at each other. Remember I told you the other day that we had all of a sudden all four indices embed together. And that's a very unusual situation. Embedding happens when you take a market that looks like this and the momentum is getting overbought, and the market starts switching and stays there, and it changes the way that I define that momentum to locking in a bull trend until the red line gets back under 80. And as you can see, as it's done this, the market is now climbing higher. So a target still the upper Bollinger Band if it wants to climb. You have the embedded reading in here in the NASDAQ. I don't want to see today's lows taken out, and I still have this area. Now, somewhere between the upper Bollinger Band, the 100-day, and the 200-day, this whole area is where I'm looking for resistance there, the S&P as well. I mean, it'd be a heck of a rally if it happened, but it's a logical resistance point. The same here in the Dow. I've got the upper Bollinger Band at 24,715, then 25,009.5, and then 25,144. That's far away from the all-time highs, but we're getting into zones where resistance starts showing up. Maybe that's the best thing I could say. At the same time, you know, I get very friendly in market whenever I have embedded slow stochastics, and I have it in all the indices, and they're all still climbing, and I see the same thing in the Russell that I do in the others. Now in the VIX, you've got the bearish embedded reading. The battleground has been, and I think I've mentioned it each day this week, the 100-day average of closes. If it can give ground through here, you might be able to go to the top of last year's trading range back into that 13 zone. It's hard to tell, but that's one of the shots. When we come to the bonds, if bonds were to start taking out now the lows of 144.24, you could end up with lower highs, lower lows, setting in place a bit of a higher rate down to the 14400 level. The dilemma for the market is I don't know how aggressive the bears want to be. You're already in oversold territory, nowhere near embedding. Same thing in the 10-year notes. In fact, in the 10-year notes, the way that I define charting throughout bear signals. You've got lower highs, lower lows. What would negate it? Taking out today's high. Don't take that out. You've got in play here still the lower Bollinger Band, admittedly oversold, but you're already in the downtrend, downside bias, but I don't like that it's that oversold. TLT, the popular ETF for interest rates, lower highs, lower lows, oversold, and today, interesting, a bit higher. So it deviated from what we're seeing in the futures markets. Now in the dollar index, we've rallied back up to this 18-day average, and we're sort of stuck there. I would have thought the dollar would have gotten a little bit more of a bid than it did today when that, what I'll call is a trial balloon sent out by Treasury Secretary Mnuchin with the idea maybe we start pulling back on some of the sanctions on China. It flies in everyone's face because just yesterday the Department of Justice said it's about to indict the Chinese tech giant Huawei. So which part of the argument you want? And by the way, Robert Lighthizer came out today and said, no, he's against taking those tariffs off. That keeps the pressure for the negotiation. I think they've sent out their message to the Chinese. Let's get further along. We're ready to take something off. That seems to be the logic. In the eurocurrency, no bounce from this either. Lower highs, lower lows, downtrend. Now, is the market oversold? It's knocking on the door, but you got to be under 30 to be there. If it had another leg down, I'd look for support against the lower Bollinger Band and these previous break lows to see if that supports the market enough. In the British pound, now the question is the next outcome, which everybody... The common guess that I'm reading from what I think are those in the know is an extension of the March 29th date as the Brits try to figure out what to do next. The fact that the British government got a confidence vote yesterday, the fact that you can't go back at Miss May, puts Labour on the far right. I don't see a general referendum for a vote now, and the question is where you go. Obviously, the market is up into key resistance of the 100-day average in the upper Bollinger Band, but as I said, this is a wild event, and come Monday, there's supposed to be a plan B. I'll let you that like to trade a market like that do so. In the Japanese yen, you have finally hit the 18-day average that I've been so long telling you when you lost the embedded reading was eventually likely to happen, and it did it. So I feel good that in way more cases when that happens that you lose it. If you have the patience and you look at what happens, price in the 18-day average attempt. That doesn't mean they always do it, but often there's an attempt where they make a run at each other. I've seen it miss a fair share of times too, but I tell you that as I look at it, I believe, and I haven't done my numerical study, that it's a lot more times that it makes that run to it. In Bitcoin, We're just narrowing in on the Bollinger Band. Think of it as a pipe. Prices are winding. Is the next level down to take out those that are holding on, hoping that Bitcoin's finally got a base, or is the next level back to the upside, saying, hey, this was enough work. It lost about 70% of its value and from last year, and maybe the market's basing out. The technical work is bearish still. You still have lower highs, lower lows, but you are oversold and momentum has run out. You're not picking up downside momentum. In the Brent versus WTI crude, here's the two problems as to what's going on. You know that they're cutting production out of OPEC. We already heard that the Saudis have cut, past tense now, 458,000 barrels a day, then making up Libya, Iran, and United Arab Emirates. The rest comes out to about 750,000 barrels a day. At the same time, the idea is that the U.S. this year is going to cross the 12 million barrel a day production number, and with the new pipelines coming online later on, we'll be able to even put out more oil. So you get a certain differential. Right now it seems to be comfortable in about that $8 range. When we look at Brent crude oil, I come right here. First thing I want to see is the market embedding. So first thing I look at here, both numbers over 80, and over 80. Embedded, done deal. Until the red line closes back under 80, I expect to see the market on pullbacks have support. In the meantime, you have the pattern of higher lows, higher highs. If the market moves up and away, maybe it gets to the upper Bollinger Band. If the red line in the slow stochastic closes under 80, I would look for price to make a run at the 18-day average of closes. In the WTI crude, did we embed? So let's go look. We see both numbers today are over 80, right? Yesterday, both numbers were over 80, and the day before, not the day before. So there's the 3 days in a row. It tells me that the market is still got what? It's in the bull camp, and while the market looks like it's going to settle lower, if it does, if today's high is taken out, that is a bear trap. Whoa, what do I mean by that? Outside day down should not, these are my ideas, by the way, there's no gospel on it. If that's taken out, it causes a bull trap if that high's taken out, and until the lows of today are taken out, it puts in play the possibility. I wish I could tell you that it would go there. I don't know. Puts in the possibility that we make another run to the upper Bollinger Band. In the gasoline market, overbought condition, sort of sideways action stuck here, not the same as the other markets. Natural gas, well, there's another major winter storm coming in. My alerts have been going off all day that Chicago's going to get supposedly between 4 and 8 inches. The problem is this is our high today for the next 10 days. We're going back towards well below freezing, well below. Some days they're saying we might be near the 0 level, but it'll be snow and cold. You know, when it comes here, it goes east. So I think the market's just sort of pausing here. You got to be a weatherman to trade natural gas at this time of the year. So let's talk about what I said on my morning subscriber video, because I've never done this. This is the first time you're looking at where we're at. I think this is one of the most important things I do. Why? Because you're able to sit there, and at 8:30 in the morning, this is, by the way, just how the charts will look. Black background, more studies than you see in my these videos that you're watching, and a lot more detail, a lot more where I can say buy here, sell there, here's what I think's going on, do this, do that. So I'm able to do that. So what I do is I do it at 8:30 a.m. because by then the meat markets have opened, the last of the pits on the floors are all open and everything's going. And as you know, the stock market at that point's got itself into action. So by about 8:45 on a good day, it's already rendered, shot, maybe 8:50, and I start posting it. The areas I cover: stock indices, currencies, interest rates, soft markets, meat markets, grain markets, energy markets, and I will give you not only the chart action, but what I'm seeing from already what I call pro and active traders, the technical and fundamental ideas, and throwing out, as I said, specific trade ideas. I think it's really important. The whole tape each morning lasts 10 to 15 minutes, but you're able to skip along the bottom and go to the areas you want if you decide to do that. So I want to give you an introductory price to it. $7.95 for 30 days. Come on, that's pretty good. And then if you decide to stay with it, $15 for every 30 days after that. How do you get it? Well, you can call my staff. If you go to our website under the word Our Products or Education, you're going to see Ira's Morning Subscriber video. Just click it. You don't need coupons. Away you go. Try it. What do you got to lose? It's $7.95. I think you'll find it well worth your time and effort. I'm Ira. You have a good day.